China's not easy. We want to open up China. It'll be a great thing for China, a great thing for the rest of the world.
All day yesterday, and I expect to do all day today. So they're going well. We spend lots of time together.
The whole world is holding its breath to see what exactly will happen between the two delegations. So let's hope for the best.
So this was the first step, the framework by which we will then approach and discuss growing trade. But first we had to get sort of the negativity out, and now we can go forward.
Welcome, this is Najma Minhas with UVS Deep Dive. Export controls don't sound sexy until they block AI chips and the rare earth magnets needed to build your EV car. Suddenly, supply chains break, factories halt, and superpowers start playing hardball with each other. Now, the second round of talks between the United States and China concluded very late on the second day in London. Both teams talked for over 10 to 12 hours each day. The markets were looking for a breakthrough, but looking at the body language and the words of Howard Lutnick, it looked as if the result was a damp squid. And clearly nothing big had come through. Lutnick, the U.S. Commerce Secretary, said an agreement for framework was agreed. And he repeated this at least 3 to 4 times during his and the Ambassador Jameson Greer, the United States Trade Representative's 10-minute rundown to the media of what took place during the meetings. It suggests that tough negotiations took place and that not much specifics were agreed. However, we may learn more in the next couple of days. It was not only Wall Street that was eagerly watching these discussions, but also Main Street, and both will be disappointed by the outcome. Now, the talks were held after last week's call between President Trump and President Xi, which the United States President described at the time as having a productive conversation. The US team described the current talks as important to remove the negativity in the air that had been built up between the two countries since the Geneva meeting in mid-May. Now, the framework agreed in the current meeting is expected to ensure that the rare earth minerals issue will be resolved, and in line with this, that the United States will remove recent measures that it placed on China in May after it slowed down the exports of rare earths.
That the topic of rare earth minerals and magnets with respect to the United States of America will be resolved in this framework implementation. That is a fundamental part of that. Also, there were a number of measures the United States of America put on when those rare earths were not coming. You should expect those to come off.
Trade talks between the United States and China had stalled shortly after May 12th agreement between the two leading economies to reduce tariff rates as both sides accused each other of breaching the terms. Trump had asserted that China did not honor the agreement, while Beijing dismissed the claims as being groundless and warned of strong countermeasures to protect its own economic interests, creating new fissures between the countries, which were finally broken after President Trump's outreach call to President Xi Jinping last week. As the parties went into these London talks, interesting economic data also came out of each country. The United States has seen its biggest drop in the trade deficit, the difference between the imports and exports, since September 2023. And China revealed that it has seen the biggest drop in its exports to the United States since 2020. More details on this later in the vlog. Now, as the two parties were in negotiations, news also came out that the U.S. Appeals Court had allowed the Trump administration's tariffs to stay in place until it decides the case. The U.S. Court of International Trade had ruled in May that Trump had overstepped his authority with across-the-board global levies this year, and it had blocked most of those sweeping duties from going into effect. Reporters asked the U.S. team whether this news affected the Chinese negotiators. It should have technically weakened the Chinese hand. However, the news actually came out after the negotiations had concluded, and as confirmed by the U.S. Commerce Secretary himself as well, that it did not come up for discussion. In what was described as a novel strategy, President Trump's team went into these discussions also authorized by him to unveil a negotiating strategy based on his The Art of the Deal in these U.S. China talks. And it's a historic first for the United States because it included export controls as part of the discussion. The Chinese team was led, as in the earlier discussion, by Hu Liefeng, the vice premier in charge of economic policy. And the expanded U.S. team now included the addition of Howard Lutnick, the Commerce Secretary, who is in charge of curbs on the sale of advanced technology as well as energy. Trump is said to have authorized both Lutnick and the Treasury Secretary, Scott Bessent, as part of their negotiations to remove the recent restrictions that the United States implemented on the sale of a wide variety of technology and other products to China. Now, it underscores how important China's rare earth controls are on U.S. industries. We're totally exposed, a U.S. defense contractor CEO told the Wall Street Journal. Without China's magnets, production grinds to a halt. You may remember from my earlier vlogs that China produces over 90% of the world's rare earths. I did a whole discussion on the importance of Chinese rare earth materials for the US industry in my last vlog. Do check it out. I will put a link in the description as well. Export controls have never been historically used in the United States before as a leverage for trade negotiations. The products covered by recent US restrictions are said to include jet engines and related parts, which China needs to make its own commercial aircraft, software required by Chinese companies to produce chips, and butane and ethane, which are components of natural gas, which are important to manufacture plastics. And we know China is the leader in manufacturing plastic goods. Export controls were at the top of the agenda for trade talks between US and China. China's Commerce Ministry said over the weekend that it had approved some export licenses for rare earth-related products in a goodwill gesture. A spokesperson for China's Commerce Ministry, which oversees the export controls, said it had approved a certain number of compliant applications. China is willing to further enhance communication and dialogue with relevant countries regarding export controls to facilitate compliant trade. China's near monopoly of the supply chain means that rare earths will remain a significant bargaining chip in trade negotiations. Now, the talks are likely to result in Beijing releasing rare earths for exports in higher amounts as wanted by the United States, as well as more rapid approval of export licenses. But the success of US negotiations will also determine whether China takes back export controls which were imposed during April as tit-for-tat trade tension between the two countries had escalated. China had imposed a licensing regime, which it didn't have before in the same way, on 7 rare earth minerals and several magnets, including dysprosium, terbium, and neodymium. These are all 3 vital for wind turbines, EV motors, and military radars. Now, the question is whether under the so-called framework for implementation, will this allow the United States to persuade China to remove the first set of restrictions it had imposed during the end of Biden's administration's tenure in December, where it limited many categories of rare earth materials to the United States. The Chinese did make some more goodwill gestures coming into this meeting. The American Chamber of Commerce in China said that some Chinese suppliers of American companies have received 6-month export licenses. Reuters also reported that suppliers of major American car companies, including General Motors, Ford, and the Jeep maker Stellantis, were granted temporary export licenses for a period of up to 6 months. However, while China may have stepped up the pace of license approvals to cool the diplomatic temperature, global access to Chinese rare earth minerals will likely remain much more restricted than it was before April, unless the Trump team makes some serious concessions on the tech front. Removing controls on some itty-bitty second-class semiconductors isn't going to get them too much. By the way, do you know the value of the rare earth compounds and metals imported by the United States? You'll be shocked to discover it's only $190 million in 2023, and this is according to the US government's own figures. But if you buy any from that list of more than 200 products, from cell phones to lasers, then you are buying something that cannot be built without the rare earths. Now, on the Washington side, we can expect easing of China's access to semiconductors. Trump administration may be open to loosening some restrictions on some microchips that China views as critical to its manufacturing sector. Although the United States is still expected to maintain restrictions on very high-end Nvidia chips that are capable of powering artificial intelligence systems. The Biden administration had cut off Chinese access to most AI chips because of national security concerns, and Trump has kept those restrictions in place and introduced some further ones in May, including ordering a halt to shipments of semiconductor design software and chemicals and aviation equipment. He's also revoked export licenses that have been previously issued and limited Nvidia's H20 in April that was to be sold in China alone. Do check out that vlog I recently did on Nvidia. Reporters asked specifically on the Nvidia H20 chips being open to the Chinese, and the U.S. Trade Representative Ambassador Greer sidestepped the question, saying that during every meeting he's had with the Chinese, they've always asked for export controls to be removed. Now, coming to what the hard economic numbers look like. Well, the United States economy has been resilient so far, defying predictions of immediate tariff chaos. In fact, the U.S. trade deficit marked a record-breaking decline in April as the barrage of steep new tariffs stopped the rush of imports that had preceded the new trade barriers. U.S. imports fell around 16% versus March to $351 billion in April. It's the biggest drop in dollar terms on record. Thanks to the weaker dollar, the dollar index, which is down 7% this year, exports also rose 3% to $289 billion. That meant a trade deficit of $62 billion, the smallest imbalance since September 2023. The gap had ballooned to a record in March. Imports of pharmaceuticals and other consumer goods fell $33 billion in April, while car imports fell by $6.4 billion. But it's unlikely to remain this way. U.S. companies had rushed to bring goods into the United States before the tariffs hit. So April's data now has lower imports than we'll see going forward. Whether tariffs remain at these levels is also up for question, given that the trade court threw them out, although the Trump administration has got a stay order on that decision from the appeals court. But he's also in negotiations with trading partners across the world. According to him, they're all ready to kiss his ass, remember? So we should see at least some of those tariffs decline. The World Bank is estimating that the United States growth will be slashed by 50%. The US economy is likely to grow just 1.4% this year, half the rate it recorded in 2024. And it explicitly said it was the result of President Trump's policies. He's not going to be happy with the World Bank either. United States business and household confidence has taken a pummeling, while first quarter gross domestic product contracted due to that record surge in imports as Americans front-loaded purchases to beat those tariff rises. New signs are suggesting also that private sector hiring is weakening and supply chains are breaking down. Manufacturers' profits are being squeezed. Walmart, among others, has threatened to raise prices. Trump is not happy with Walmart either. Some stories on factories are beginning to shut down because they can't get the necessary components. And some companies are reportedly considering the extraordinary step of shipping their unfinished goods to China to add to components there. So there was a desperate need from the US side to get these trade talks back on track. Now, the Chinese economy was already weak going into the tariff war, and it's showing signs of weakness even more. May exports to the United States fell 35% year on year. It's the largest drop since February 2020, and it signals that trade war havoc that President Trump has created for the country. It was the biggest percentage decline in US-bound shipments since February 2020, when exports were hit by COVID-induced shutdowns. However, overall, China's exports rose 4.8% in dollar-denominated terms in May from a year earlier. although that figure is weaker than the 5.6% which had been expected to economists. The decline in exports to the United States has been offset by a jump in outbound shipments to other regions around the world, including the European Union, Southeast Asia. Following the trade truce in Geneva last month, some US importers and Chinese manufacturers had raced to ship those previously frozen orders before the 90-day reprieve ends. Freight bookings from China to the United States ports and container prices, which had fallen under that escalating trade war, have surged now after the truce. But many companies still remain cautious. They're betting that the trade war is far from over. Data from manufacturing activity in China shows an ongoing contraction in new export orders in May onwards. As the outlook for Chinese export remains cloudy, Beijing has pledged to bolster the economy by stimulating domestic demand. Now, China tried to offset weak consumer spending at home with a huge government finance campaign to build factories and ramp up exports. But it's pressurized by the fact that the housing market collapse over the past 4 years has literally wiped out much of the savings of the country's middle class, and it's left hundreds of millions of households reluctant to spend any money. The central bank has cut interest rates and injected liquidity into the financial system. China's also maintaining a consumer goods trading program aiming to boost household spending, but it's not easy. Continuing weak demand has meant that China's imports slipped around 3.4% in May compared to the last year. And that's put China's trade surplus at $103 billion in May, widening it from the previous month of $96 billion in April's surplus. The weak domestic demand is also being reflected in this continued deflationary pressures that the country has. And data that was released on Monday by China's National Bureau of Statistics showed that factory prices dropped 3.3% last month from a year earlier. This is the biggest decline in more than a year. And in the latest sign of heightened disinflationary pressures and competition amongst businesses, the Chinese car maker BYD recently cut prices as much as 30% on different car models that it has. And it stoked fears of another price war and literally had authorities stepping in to intervene. So both countries have a lot to gain from the improvement in the trade environment. Share with me your thoughts. Do you think Trump's strategy is working, or is this just another temporary truce? Let me know in the comments below, and don't forget to check my previous videos on rare earth materials and Nvidia's AI chip ban in China. Thank you for giving me your time today, and have a great day.